Monaco 64, home of alternative economics and contrarian views. This interview is being conducted on Wednesday, February 9th, 2022. And today I have the pleasure of speaking with Paul from the Sirius report. We've spoken a couple of times already on the channel, and viewers love to hear from Paul. And I like chatting with Paul as well, even though sometimes we don't agree on everything, but I think Paul's macro view of geopolitics, markets, and yeah, is really great and very thorough. So Paul, thank you for coming back. And how are you?
Well, first off, Mario, yeah, pleasure as ever. And yeah, I'm fine. And yourself?
Yeah, I'm doing well. I went into town today for coffee, and noticing that fewer and fewer people are wearing that thing on their faces. So looks like things are getting back to normal. But today we'll start with geopolitics, because I think the tectonic plates, so to speak, are moving a little bit under the surface. So maybe we can jump into Russia, China, Macron meeting with Putin. So if you want to take it from there.
Yeah, I mean, well, it's one of those questions. It's where do we start with this? Because if we start at the beginning, we'd be here for weeks. So let's not obviously do that. But the whole basis of the whole Russia-China relationship, and there's still people in the West who are convinced it's a marriage of convenience. They talk about the border dispute still being a problem when they reached an agreement in 2004 that there weren't any border disputes. And it's constantly trying to find an angle in to convince themselves that China and Russia don't have a relationship that I think is unprecedented in history. I don't think we've ever seen a relationship like this develop the way it has. They're not allies, it's more than allies. They're not an alliance militarily. It's even stronger than an alliance. And really, we talked about this in the past, and I have in my podcasts about all manner of developments in terms of the multipolar world. Well, the multipolar world really is the answer to the failed and never succeeded unipolar world, where unipolar means one world government. So there's a lot of endless stories and conjecture about rolling out this new world order, this one world government. Well, that died on its feet in 1944 when the US proposed it, and Russia and the UK when it's not happening. We're not having a unipolar world. And of course, the US has spent decades chipping away at it, trying to make it succeed, and it's failed spectacularly. And particularly, I would say, in the last, geopolitically, that is, in the last decade or so. I mean, there's been failures like Vietnam going back into the dim, distant past. But the whole basis of China and Russia was they realized they needed to overcome their differences, because there were differences going back from the 60s and the 70s. There's no doubt about that whatsoever. But they effectively worked out their differences. As I said, the people I know advised them both, look, the financialization of Western economies is their downfall. Eventually, not now, but at some point in the relatively near future, and here we are today, you're going to see the collapse of the Western financial system. You're going to see the collapse of fiat currencies, the dollar, and you need to be thinking about what you need to do to make sure you're not sucked into that world. And let's be honest, there was still even remnants of a lot of Keynesianism in China, even in the early 2000s. But eventually, they kind of removed all the remnants of the West and all the Western influence out of both China and Russia, and understood that the unipolar world, as it existed in whatever form it was effectively on its way out, which it is now. And there needed to be a multipolar world. So the idea was the rebirth of what was the old Silk Road to the Belt and Road Initiative. Now, clearly, China and Russia, if you look at it, are even geographically extremely important nations in the context of Eurasia. So we've seen all these enormous developments with, nations obviously signing up to the Belt and Road. I think it's over 140, and wherever China is, Russia is. We increasingly see that. Well, there used to be maybe a month or two apart where there'd be some deal, or bilateral agreement signed between, say, China and another nation, and then Russia would follow on behind. They're literally now, this is happening a week later or a few days later. And recently, of course, there was the meeting between Xi Jinping and Putin in Beijing just prior to the Olympics starting. And of course, they issued this joint declaration. And for most people in the West, it was meaningless. They went, well, who cares? This is just a very bland statement that means nothing. But in essence, that was effectively drawing a line under the past and saying, well, the unipolar world's dead. It might be still struggling and pretending it has relevance, but it doesn't. And here's a kind of joint declaration that lays out future ideas for not just because the multipolar world's been developing for at least a decade and longer in some cases, but to really roll this out. And this was the vision for the next 50 years in terms of, in a broad sense, okay, here's a number of mandates about how governing bodies in the world need to be reformed, how basically made very pointed reference to the United States' kind of zero-sum game mentality, and everything we know about the US no longer applies in the world, and how we need to have proper dealing with proper inequality and all those kind of things that we've discussed. And we're not going to go through the whole list. If anyone wants to read it, by all means do so. But in essence, that was saying we're laying out the blueprint for the future now. Much of the existing multipolar world was looking for this. They wanted to see some idea that China and Russia collectively are going to take on the mantle of not being a dominant power, but saying we're going to take responsibility and try to right all the wrongs we've seen essentially since at least World War II and certainly prior to that. And in essence, that's what this blueprint lays out. And most certainly, the United States was deeply fearful. There were rumors, not that it was ever going to happen, especially not with Putin being in Beijing at the time, that they may make some announcement about obviously their own financial system, which I talked about years ago and actually was the first person to say they've developed it, they've road tested it, and when the Western financial system capitulates, they'll roll it out. And then just prior to Christmas, they came out with an announcement in a very sort of casual way. Well, we're working on this alternative financial system. Well, that means it's ready to roll at the appropriate time. And in essence, there was fear in the West that they may make some major announcement. So it was kind of like a Bretton Woods version 2.0, but less emphasis on that sort of specific detail and more emphasis in very broad terms. This is the plan for the future. And nations across the world are very, very pleased to see this because they actually see China and Russia taking the initiative. Because it's one thing sort of espousing to want to change things, and it's quite another thing actually saying, well, we want to implement and roll it out. Now, of course, countless nations have signed up to the Belt and Road. Argentina is a great example recently where we saw China signing deals, Argentina joining the Belt and Road. And on the back of that, Fernandez turns up in Moscow for a meeting with Putin, and they, of course, reach agreements and sign some deals. So it's the same sort of principle that it already exists, but it's another thing of saying, okay, increasingly the world's looking at the Western financial system, unlike the West, who thinks that somehow it's retrievable, and going, we understand the reality. So we need some idea, okay, if you've got an alternative financial system, nations are aware of this, the ASEAN nations, they know that at some point in the future, they can effectively bolt onto that and utilize that system. It's a completely, obviously, non-dollar world. Now, again, it doesn't mean China's going to have the world reserve currency, because in the future, there won't be world reserve currencies. There's also not going to be dominant nations in the future, because China and Russia never want to be dominant nations. But they've looked at the US model alone and gone, well, that's absolutely insane, because look at the damage it's done to the US in the process, not least in effectively its financial system operates on the basis, well, we give you worthless bits of paper called treasuries, and in return, you give us a bunch of free dollars. But they're now starting to realize in very great detail the folly of that. For years, they're kind of still tinkering. Well, maybe we can find some system that approximates to what the US was doing, but then they realized that was complete folly, and therefore they've turned away from that. And of course, the basis of the future will be sound money and the adoption of digital yuan, digital ruble. Now, there's a lot of fear about people regarding central bank digital currencies. Okay, I can't speak precisely for what the West has said, but the noise is coming out already is, no, we're not replacing cash. And no, we're not going to go through the whole cashless society argument and why that falls flat on its face because of just the narco trade as one example. But the point is, the rationalization or the rationale, for utilizing the crypto ruble and the crypto yuan is simply we can facilitate it in international trade. It speeds up the transaction process. We cut out intermediaries. We're not part of SWIFT. It cuts the cost of transactions. It also makes the visibility and transparency of transactions far more clear to everybody. And that's the whole basis. You can internationalize it. So, for example, with a crypto ruble, that could be utilized by the Eurasian Economic Union. Or China and Russia can trade in crypto ruble or yuan. And of course, the basis is it's outside the dollar system. And okay, there's the whole argument about excluding Russia from SWIFT, which just cements the idea that why would we want to be part of a SWIFT system when we don't need to be? We don't want to trade in the dollar in the future. As far as we're concerned, the dollar will be persona non grata at some point. So this is part of the alternative financial system, and the ASEAN nations can bolt into the crypto yuan or the digital yuan. And the basis is if you back your currency, either yuan or ruble, with gold, then what it allows you to do is, because one traditional, shall we say, yuan equals one digital yuan, they're interchangeable, then by definition, your digital yuan is backed by gold. So nations will gladly trade in it. Now, people will say they can't back their currency with gold, they don't have enough gold, etc. Well, it's very simple. A, they have enough gold. They have at least 40,000 tons of gold. And the other point is they can fix the yuan at any price they want in relative terms to say where the dollar is now. So they can quite easily back it. And the idea that people say, well, you have to keep moving gold all around the world. No, you don't. The problem is there's a lack of trust in the West, rightly, with, well, is my gold actually in the Federal Reserve, or is my gold actually where I'm told it is? In fact, does it even exist? Well, that's a problem that exists in the West, and understandably so. But the trust factor in the East is not like that. So you could have enormous vaults, and there are vaults being developed all over Asia, all over China, all over Russia, where you will have segregated vaults. And if in a financial year you say, okay, Russia and China trade, and the trade-off is that China has 5 tons of metal equivalent extra kind of exports as opposed to imports. That's the trade imbalance or balance between the two nations. And you can sit there and go, okay, well, if we have it on a blockchain, then we go, okay, yeah, we've just effectively moved 5 tons of gold into the other camp, and you don't have to keep flying gold all around the world. And people say as well, well, you can't implement a gold-backed yuan. Well, already, if you want to settle RMB, China will allow you to settle RMB in gold. You could do it in oil. Russia can do it. They obviously trade in RMB in terms of energy, and if Russia wants it swapped into gold, they can do so. So the idea this isn't possible is simply just people in the West again look at the West and go, well, that's the zenith of humanity's capabilities. No one else can do things better than us, so it's impossible. But of course, that's not the case. So the West stood there, or the US has stood there, and its worst nightmare was, A, a rejuvenated China that refused to cooperate with the United States. And they thought things were going swimmingly well until the Trump administration, because recall early in his presidency, he wined and dined Xi and his wife, rolled out the red carpet. And as soon as China went, sorry, we're not capitulating to your demand, then they turned rogue and hostile towards China. And that's why we see all this anti-Chinese sentiment to this day. It's not based in reality. It's because they saw it as an affront that China refused to roll over. So there's one major adversary. They tried to collapse Russia through the Ukraine Maidan, and it failed. And now look at Russia. Okay, internally it has problems, but massive resource base. I mean, effectively, it's got net zero debt, and it has enormous gold reserves. Its central bank's actually done really positive developments in terms of managing its economy due to the enormous sanctions that the United States and its allies, in inverted commas, imposed on Russia post 2014. So seeing them individually to the US is a problem. When you put them together and it's an actually bona fide alliance, not a marriage of convenience, as the West keeps deluding itself it is, then the US is going, well, we can't compete with them. We can't destroy them. We can't go to war with them because the war's off the table now. The US is militarily so inferior particularly to Russia, but also increasingly to China, that war's not an option. So, what's it currently trying to do with Ukraine? I mean, bearing in mind the US effectively has been there since 2014. Why did it start trying to escalate problems in 2021? It's simply because the United States and its Western financial system is teetering on the edge of an abyss. So it's desperate to try and invoke something that it thinks not just deflecting away from the problem, but something that might resolve their internal problems, even though, of course, it's complete nonsense. So here's the bottom line. One of the main reasons is they want Europe to stop importing any LNG. So not just don't let Nord Stream 2 happen, don't let Nord Stream 1 happen, shut it all down. We'll provide the LNG, which they can't. I mean, and it's significantly more expensive anyway. So the US is running around the world saying, Qatar, can you give them LNG? No, we can't. Norway, can you help out with this? No, we can't. So the list goes on and on. But what the US is trying to do, it's trying to drive a bigger wedge between Europe and Germany, Europe and Russia, because it's terrified of Germany rotating east and taking France with it and the rest of Europe, because then it's game over. NATO would cease to exist. And the United States, as what's left of its Germany, which isn't much, would evaporate in the blink of an eye. So it's all about trying to isolate Europe from Russia. And they think they can economically destroy Russia because they failed in 2014. So they're very bitter and upset about that. And they think we can do this again. And maybe we can financially benefit then with Europe, and we can make sure Europe stays within our sphere of influence because we've lost Asia. We're losing the Middle East. We're losing Africa. We're losing South America and Central America. But let's keep Europe in our sphere. So the argument is, having done this with Ukraine and Russia, they'll at some point go, right, let's go and do it with China and Taiwan. It's the same kind of MO, very predictable. China, Russia knows this. Most of the world understands this. Most people in the West sadly don't. So that's a very sort of high level view of what's happened in recent months and why the US is trying to undermine Russia by Ukraine. It will keep nibbling away at Taiwan, but it's not succeeding particularly well, but it's going to go back to it at some point. Iran, they seem to have blow hot and cold on that. They desperately don't want the JCPOA to be signed off, so they're kind of stalling the process. But they've recently made some concessions that they can, removing sort of sanctions in terms of developing nuclear power, etc. So there is some sort of compromise, but lingering in the background is always the risk that, as happened in the Trump administration, that they may decide to invoke some sort of unilateral military action. It's not totally off the table, but at the moment, it doesn't seem to be particularly in the sort of crosshairs of their thinking. Then, of course, there's North Korea, and they tried to put more sanctions on North Korea because after years of launching missiles and being ignored, even though in 2017 the US nearly had a hot war over the missiles being launched then, which were far less sophisticated. But China and Russia just blocked that in the UN, so they went, okay, let's just move away and forget North Korea. But they're just flip-flopping around, trying to do something, trying to also destabilize China and Russia, thinking, well, that will derail the multipolar world, that will derail the Belt and Road Initiative. And Kazakhstan was a classic example. Look at it geographically. They thought, well, if we can put a Western sympathetic leader in there, that will derail plans. It will also derail plans in terms of the Eurasian Economic Union, in terms of the Belt and Road, in terms of China's relationship with Kazakhstan and Russia's relationship. And of course, the color revolution failed. Russia sent the STO went in, it was all over in a week, and the US was left fuming and worse, foaming at the mouth that again, they'd been thwarted. And that was one point they made in this joint declaration, that they're not going to tolerate Russia trying to color revolutions anywhere. They'll step in and deal with it. And the nations who have been subject to this are going, well, that's a refreshing change. And they've seen an example of it in Kazakhstan. They saw it in Belarus. They saw it with the failure of it in Cuba, in Honduras, Nicaragua, and the list goes on and on and on. And that's just in the last couple of years or so. So that's kind of where we're at in terms of the joint declaration, what it means in reality. Might not mean much to people in the West, but certain Western governments have looked at it extremely closely. The US was extremely nervous as to the consequences of what it means, but huge swathes of the world who've bought into the multipolar dream, so to speak, are extremely enthusiastic about what it means, but trying to roll out those reforms and changes is an enormous job. But if you've got a collective buy-in of most of the world, it will help significantly. And as I tweeted the other day, the only thing that's preventing the complete rollout of the multipolar world, and I'm not going to apologize, it's the nut jobs in Washington, certain nut jobs in the UK, and the European Union being lacking the backbone to say, and really stand up and say to the United States, sorry, we're not going to tolerate this. This is not acceptable. And we're refusing for you to, and particularly Germany, for us to be a captive state. I mean, Maria Zakharova came out very tellingly and really stated, okay, what the obvious, that Germany's an occupied state, and for all the reasons we've discussed previously, and at some point, and also it is true, Europe in terms of the European Union is at this huge major inflection point. It hasn't existed for just over 20 years, but it needs to decide, does it go down with the US or does it rotate east? Now, the Ukraine debacle could be the catalyst or the defining point in history that says, well, at that point, Europe made this decision and it rotated east. It made this decision and went down with the US. So, and I think it's something that will be spoken about for many decades and longer to come. And because effectively, that's where Europe is. There is talk and mutterings, certainly from engagement with Macron and obviously Scholz, but I'll park it there because I've been talking nonstop for a long time. So I'll give way to you, Maria.
Yes, Paul, that was very thorough. And I do have a few questions and some comments in response. You spoke about the meeting between Putin and Xi Jinping in Beijing before the Olympics. And I also noticed that they agreed to a 30-year gas deal where Russia will sell natural gas to China in euros. And I thought that was an interesting agreement because it's almost like giving the Europeans like a nudge. Look, we're helping you, so join us. And so that's the first point. The other point I would make is you mentioned the president of Argentina. I saw that he met with Vladimir Putin in the Kremlin. And then I don't know if it was before or after, but he also met with the president of China in Beijing. And I noticed, though, and this is something that maybe you can touch upon after I finish my comments, that the mainstream media and even the alternative media, there's so much animosity against China and Russia. They're like talking about human rights abuses as if the West never committed any human rights abuses. And I'm not like condoning any of the actions of the Chinese or Russian government, but I'm just saying we need to keep it, realistic here. But I noticed, for example, in the Telegraph, there's an article, like an editorial by someone saying that now China is going to push the British to try to give up the Falklands or the Malvinas, as the Argentinians say, just because now the Argentinians are joining up with the Chinese. And I thought that was more propaganda than anything else. And I also noticed that Bolsonaro, the president of Brazil, he's supposed to meet Putin in Moscow, very soon in February. And I wonder if he's going to meet also Xi Jinping. And just to finish off here, and then you can respond maybe about this jingoism against Russia and China. When you speak about a gold-backed crypto yuan or a crypto ruble, I also think it's important that the other countries that want to play ball in this multipolar world, they will also need to have a good backing of their currency with gold. And maybe that's why countries like Brazil and others have been buying so much gold, more than usual in the last 18 months or so. And yeah, so I'll let you respond to that.
Yeah, well, we'll start with the gold backing. You're absolutely right. It's not uniquely going to be, well, here's China, Russia with gold-backed ruble or gold-backed yuan. Yes, there may be a phasing process. I mean, I don't doubt at some point in the future, I mean, to what degree this happens, it's not clear, but the African Union is already looking at having basically a central currency. What form it takes is not clear. It'll probably be digital, and at some point it'll probably be backed by gold, because there's no doubt, I've always said this, Africa will be a resurgent continent in the coming decades, and maybe a lot sooner than we think. So yeah, it's not going to be unique to that. I mean, there's an argument Germany could easily back a future, whether it's a euro, a Nordic euro, going back to Deutschmarks, who knows at this point. But yes, there's certainly capability for nations to do that. In terms of this whole jingoism, look, I made the point back when relations between the US and China took a serious nosedive. And I actually said, probably 4 years ago, maybe a bit longer, that you're going to see an anti-Chinese sentiment that will make what the anti-Russian sentiment pale into insignificance. And here we are today. There's an inevitability. And there are a few reasons for this, but the Xinjiang story is interesting because the US never made any reference to it. No one ever talked about it. No one said it was a problem until China wouldn't play ball. Then it became a problem. Now, as I've said before, and I'll say it again, I've been there and visited it, the entire area, or pretty much all of it, and I've never seen, there's nothing. It's simply not a reality what the West is saying. But going back to the fundamental point, what it is, there's a mentality, and I think this permeates, obviously, the mainstream media, unsurprisingly, but it also permeates a lot of the alt media. And where the fear is as much as in the alt media, because let's park the mainstream media, we know what they think. The alt media's attitude is, well, we don't like what's going on in Western nations. We don't like central banks. We don't like the banking system. We don't like governments. And that's completely understandable. what their fear is, and what's being kind of is kind of almost being kind of induced in the alt media, is the idea, well, if the West collapses, China and Russia are going to become hegemonic powers. China and Russia are totalitarian dictatorships, as most people, even the alt media, think. Therefore, they're going to impose that form of totalitarianism on the rest of the world. That's where the fear stands, which of course is nonsense. So how often in the alt media do we hear people saying, well, vaccine passports will just be extended. They'll form a social credit system like the Chinese, even though they've got no idea what that actually means in China. And in fact, their observations about what it is are completely incorrect. But therefore, and then they're going to attach that to a central bank digital currency, and then they're going to control us all. Like, I've used the analogy of like AI hamsters in a wheel. Well, of course, none of that's reality. But that's kind of something that's just fed on the fear that, well, we've had an hegemonic power, so we must have one in the future. Well, just ask the 140 nations who've signed up to the Belt and Road if they think China is an hegemonic power. Absolutely not the case. Neither is Russia. They're not interested. They don't want that. But that's what permeates people's thought process. And of course, in the mainstream media, it's very easy to have a captive audience of people who believe in that reality of, well, China and Russia are a problem. They're totalitarian dictatorships. Putin's the Antichrist and so is Xi. So that's the basis of that. Now, of course, at some point, eventually, Western attitudes will change. But unfortunately, and this is something, as a sort of side note, Germany and France are suffering from. Germany and France are looking at the whole Ukraine situation and going, well, actually, we risk, in inverted commas, and not that it's going to happen, but we risk a third world war incinerating Europe, while America's sat there going, well, it's not our problem. Because the war's going to be fought in Europe. We're the meat in this sandwich, and we don't like that. Germany also doesn't like the fact that the US, Biden came out and effectively said to the media, well, if we want to stop Nord Stream 2, we'll stop it. When someone asked him, well, hang on, it's not even in your country, it's not your choice. Well, yes, it is our choice. So there's a lot of fear and concern inside these nations that, hang on, we don't want to be part of this sphere of NATO. We don't want to be the meat in the sandwich. We don't want to be captive vassal states. We don't want to, in reality, buy far more expensive LNG and with no guarantee of future supply when Russia can keep pumping LNG for decades to come. So the problem is, it's the investment in political capital. Even I don't think of myself as alt media. I do what I do. But we have a lot of problems. Increasingly less where people go, well, you're just an agent from the Kremlin and Beijing. No, I'm just telling people what's happening in the world. This is reality. So extrapolate that to the real world and the political system, and you could have Macron and Scholz who are going, we don't really want to be part of this anymore. But if we go and publicly say we're going to tear up NATO, we're going to form a European army with Russian integration, which eventually will happen, and they've kind of talked a little bit in a coded way about this, it's political suicide. Because the average German and French person is going to go, what? You want us to be part of Russia? What are you doing? Because the indoctrination in the West against Russia is, as we both know and everybody listening will know, is enormous. So that creates a huge problem when you've invested that much political capital in indoctrinating and frankly brainwashing people in the West against Russia. It's very hard to turn around and say, well, actually, we want an end to this, but there are enough people, not entirely, because there's Atlanticists all over Europe. There's the European Union with a bunch of Atlanticists who are all very sycophants towards the United States. So they don't want anything to change, even though they don't realize they're going down with the US Titanic if they persist doing this. But of course, they're blinded by the hubris of the United States. But that fundamentally is an enormous problem that exists inside Europe itself. So this jingoism extends in all facets. At some point, people are going to have to get over it and realize that China isn't what they think China is. Russia isn't what they think it is. Are they perfect nations? Of course they're not. But a lot of the rhetoric that's written about them is simply not true. And the amount of people who've argued with me, and I've said, well, how much time have you spent in Russia? Have you ever been there? No. What do you know about it? Directly, nothing. Well, maybe you need to rethink your understanding of it. But that's the fundamental challenge with regards to the whole sort of jingoism. So it's one of those things, eventually barriers will be broken down, common sense will prevail, but to what extent Europe and the West, the wrecking ball demolishes it, at this point, we don't know. But we're at that sort of crossroads where, look at the UK, they're even going, well, we need huge Chinese investment. Let's kind of not talk about the things we made a big play on about Xinjiang and Hong Kong. Let's just not even discuss that. We need investment. So let's start being nice and trying to rebuild relations. So there's a whole different myriad of different thoughts amongst nations, but certainly elements within Europe increasingly are turning against the US, are having second thoughts. Okay, the Baltic states definitely aren't, and Poland isn't, because they're just so ingrained in the belief that Russia's the arch enemy and we're in the era of the Soviet times and it's World War II or whatever their perception is. And therefore, they're going to be the last nations to kind of rotate to thinking that, we need to have more autonomy. But it's a very difficult time for all these nations, because if they didn't have all this political capital, with not just in terms of internal politics and geopolitics, economics, finance, but in terms of their own people, they could probably break out a lot easier and go, look, we've had enough of this fake Cold War. There is no Cold War. It's just justifying military industrial complex spending trillions of dollars or whatever a year, in reality, not the official budget. We don't want any part of that, but that's impossible at the moment, or perceived to be impossible. But there's little shards of light coming through via Macron and Scholz, who are sort of not exactly coming out and saying it's over, but going, we need a rethink on European strategy, European security architecture. And it's interesting, Macron referred to Russia as being part of Europe, which it is, and talking about a collective European security, almost like, well, we need to move towards this. And it's certainly, for me, something I've said for quite a few years. Eventually, NATO won't exist the way it is. And Europe will have to have a collective approach, because the threat in the future is going to be terrorism. And it could be all forms of terrorism, the cyber warfare, all these problems. And Europe will need Russia in that sense, because Russia actually will be far more of a useful ally in it dealing with the problems of the future. It isn't going to be world wars or the threat of nuclear war or that Russia's kind of the bogeyman, and therefore we need to constantly face off against them, because they may invade in 5 minutes or launch a World War III. Those kind of ideas will just fall away, and probably sooner than many people realize.
Yes, I mean, when you mention the military-industrial complex, it seems that they have a lot to lose, because why can't we have a world of cooperation? I'm not being like saying that we should have a utopia where everyone is living in peace, even though we should. Yeah, and it's much better than just like being where we are right now. And one of the other points I'd like to make about Russia, at least, I've never been there, but I remember watching the World Cup football back in 2018. And I think that's why now today with the Winter Olympics, there's a lot of propaganda I see in the media here against this Winter Olympics. They're saying, oh, the ratings are down. But I remember a few years ago when they had the Summer Olympics, there was none of that, the Summer Olympics in China. People were, watching it, seeing China. But I remember Russia during the World Cup and watching the games, watching some people that went there from the UK, filming YouTube videos. it seemed like a very nice place. And again, I've never been there. But the other thing I would point out, you look at the US debt clock, and then you go to world debt clock, and on the same page, it brings another page. And the Russian national debt is 17%. And I don't know if this is still the case, maybe you know, but I also think that in Russia, there's like a flat tax for everything. It's like 13%.
Yes, it is. Yeah, yeah.
Yeah. So me being like a libertarian, someone who likes free markets, small government, that makes a lot more sense to me to have. I think you'd be a lot freer having 13% tax in your country, having only 17% national debt to GDP, than what we have in the West now, over 50% of taxation of the private economy and national debts above 100%. So talking about debt and taxes, maybe we can move on to the markets now, Paul. And
Okay.
yeah, I made a few notes here, and I want to see what you think, because I think what's happened in the end of January, first week of February this year, with the central banks meeting. First, you had the Fed, then the Bank of England, and then the ECB. There seems to be a sea change, at least the way I see it, in the bond markets, and the fact that we're seeing yields, even in Japan, break out to the upside. Of course, the central bankers are going to try to make it seem that they're under control and that inflation will come down. So do you want to give the viewers your opinion on what's going on there, and maybe related to gold and silver as well?
Yeah, I mean, we've seen, you're absolutely right, there's been this huge sort of move out of negative rates for bonds into positive territory. I think there was a reduction in a matter of weeks, or maybe a month, maybe 6 weeks, whatever, of 70% of global bonds. So the issue with regards to the Fed and obviously the ECB is they're getting under a lot of pressure to say, look, you need to raise interest rates. Now, we know in reality they can't raise interest rates, and we've discussed before, because of the massive level of indebtedness. There's also risks in raising interest rates. You blow up the derivatives markets, notably interest rate swaps, and how interest rate swaps are actually linked to US Treasuries and all manner of very peculiar, exotic derivatives that exist. So it's fundamentally, and also we'll come to the asset problem with that, all the asset bubbles they've created. So they're under pressure. So they're kind of making noises and going. And there's people saying to me, oh, well, they're being very hawkish. Now, hawkish is raising interest rates, not claiming we might do it next month or next, maybe 2 rate hikes this year. And some people going 7 and all this kind of nonsense. For me, it's really largely irrelevant, because the problem is, in reality, they can't raise interest rates significantly. And the truth is, even if they raised interest rates to 3% in the US, apart from blowing everything up, it wouldn't really do anything to inflation anyway. But in terms of the bond market, you're absolutely right. We've seen the 10-year, which is kind of always the barometer, get to, I think, 1.95. I think the last time I looked earlier, it was 1.92. The 2 years kind of at about 1.33, something like that. And interestingly, the not often quoted 20-year and the 30-year have sort of just about inverted, only slightly. So there's definitely an indication there's a rout in the bond markets. And of course, a lot of this is to do with the fact that people are sort of saying, well, in bond investors going, well, what's the outlook? Do we actually think inflation is going to be a problem? And I think the way just taking the US as an example in terms of the bond market, I don't think people are actually believing either they're going to raise interest rates, or they're actually going to raise interest rates sufficiently to make any difference. I mean, There is, of course, yield curve control. We know that the Fed, and not exclusively the Fed, the ECB are constantly trying to control the bond markets. And my observation always is, as yields are rising, who's dumping all the treasuries and where are they effectively being siloed? And because at the moment it's very clear to me, a lot of bonds are being dumped, and not least through de-dollarization, and that's sort of getting out the US Treasury, US dollar complex. So where are they being siloed? Well, when you start to see nations with enormous treasuries, in terms of the tick report, I get suspicious and think that they're being stashed in the Caymans, even in the UK, Brazil, everywhere else, and claiming that in fact, that foreign entities are holding them when they're not. So question is, okay, at what point does the Fed actually almost being strong-armed into raising interest rates? Now, okay, you can raise it 0.25%, 25 basis points. Is it actually going to make any material difference? Well, here's the problem for them. The mere talk about it, or the fear that it actually might have happened, was what saw equity markets in the US fall about 10%. Just the mere thought, when it was sort of said, well, actually, well, it's not happening now, but we're going to kick it down the road a little bit, then the market started to recover a bit. The point is, it's the psychological impact. If they raise interest rates like 25 basis points, does the market start getting very jittery? And really the whole barometer of the entire Western economies, or has since 2008, really is all predicated on, apart from QE, zero interest rate policy, is all these ridiculous asset bubbles. So bond markets, housing market, equities. And of course, as we know, and I'm going to say something because I don't think I've actually said this before, certainly not with you, Mario, that they genuinely thought in central banks that if they pumped all this QE and it all went into the financial system, that somehow that would generate wealth in the financial system. And that somehow literally would trickle through the real economy and stimulate economic growth, which of course was nonsense. They ever thought like that. And of course, it's never been a reality. But now, of course, all this money effectively stuck inside these asset bubbles. Well, we saw the other day, what was it, when Facebook, I think, fell 25%. It's just an example, and I can't remember how much it lost into. But, it was hundreds of billions of dollars off its market cap. Now, there's a lot of these assets where with these bubbles where there's huge amounts of money sat in there. Well, apart from anything else, one of the reasons they don't want the markets to capitulate is because there's a lot of people with huge amounts of money sat in there who are could literally get wiped out. So the idea that, this 1% have generated all this wealth, no, they've generated bits of paper, but a lot of that wealth could evaporate in the blink of an eye. And okay, as a small example, we saw Facebook, what happened. Those market gyrations can become quite serious. So the psychological fear is you raise interest rates slightly and the markets have an aneurysm. And they won't just fall 10%, they could fall 15, 20%. I think there's an argument about liquidity in the market, which could create this cascading effect. And of course, they just absolutely can't allow that to happen. The other risk is when you've got all these inflating asset prices, how are they linked to covenants in terms of debt? Now, if the share price falls, they might start to look, well, hang on, you're defaulting. Therefore, we want our creditors want their debt back. Sorry, we can't do that. Businesses start going busts because of the whole financialization of the economy and how it's all intertwined. You set up this cascading effect. That's what they're really fearful of. I mean, ordinarily, you might look at a situation in times that no longer exist where, okay, if there's a correction in the market, so what? It doesn't actually blow up the real economy, but this is going to seriously impact, I say, what's left of the real economy. So there comes a point, okay, if yields keep rising, then of course, by implication, I think for 30-year mortgages, the rate's now gone up in the US 0.75% alone. So the question is, if you start hiking rates, what does it do? What does it do to an indebted economy? a zombified, indebted economy like the US, when if rates keep rising. So then there comes a point, does the Fed step in and go, well, actually, we can't, even though they're not, effectively tapering, they're claiming to be tapering, and then but you can clearly see, why is their balance sheet growing? It's not true. So, but it's the perception that they actually have to come out and admit, well, we're stopping tapering. In fact, we're going to increase bond purchases, and then we're going to have to suppress the yield curve to the extent it'll be very obvious to everyone they're doing it. Then the whole credibility thing comes in. But fundamentally boils down to one fact. They have two choices: raise interest rates and risk blowing everything up. And when I mean everything, I mean everything. Or take their chances. They don't raise interest rates and think inflation's this transitory thing, okay, over a longer time frame, maybe a year, maybe 2 years, or whatever people's perspective is. And they'll look at it and go, well, okay, maybe what we can do is just bluff our way through inflation. Because a lot, they're trying to talk their own book and go, well, in 12 months, we think inflation, we might be back at 2.5%, and then it'll reach our mythical 2% target. And that's what they're kind of banking on. So they don't want to raise interest rates. Bank of England's kind of bucked the trend a bit and gone, well, okay, they've raised it again. That's 2 interest rate hikes. It hasn't thus far blown the markets up in terms of the UK. But the question is, the UK and the US are very different beasts. I mean, the risk is we are going to start to see the effects of this kicking in. In the real economy, we're already seeing a cost of living crisis here due to energy, inflation, food hikes. We're starting to see businesses going under and businesses being deeply fearful in the next 6 to 12 months that they're going to go bankrupt. But I think we saw almost record defaults, record bankruptcies in England and Wales in the last quarter of 2021. So there's a precedent that the reality will kick in where, and that's the other thing, is one thing managing the markets, but it's if you're drowning in debt and everything is either being since the pandemic furloughed, payments, bailouts, loans that now have to be paid back, and of course companies can't pay it back. People, they said, were drowning in all this cash they didn't spend during the pandemic, which was a lie, because it turns out it's all credit. I know someone really well who's a builder. He does lots of major extensions and things like that. He's booked up for the next 18 months with work. And what he said to me is it's people who are looking at their housing, what their house is now valued, and going, and making the fatal mistake going, I'll take equity out that property and have an extension built. So it's not like we've got all this money stashed in the bank and we can go and pay for, a conservatory, or I want to put an extension in the loft or extend out the back of the house. It's all being financed by people doing things like taking loans or equity out of their property, fatal mistakes at the wrong point in the cycle. So all these converging points are at some point going to come together, and you can inevitably guarantee that whether the market reacts to the UK raising interest rates, the economic reality, the real reality, not the illusion they've been presenting since 2008, will come to pass. And effectively, it's the same process in the in the Eurozone, but the European Central Bank has even bigger headaches, as we can, maybe I'll pause there, because obviously there's 27 member states with disparate economies, and raising interest rates is going to cause enormous problems for reasons we can discuss shortly.
Yes, as for the UK, did you see a story or headline a week or two ago that apparently 300,000, I think, construction companies have gone bust in the UK? Did you?
Yes, I have. I've seen it. Yes, I did see that. Absolutely.
Yeah, and that's despite the fact that people are still borrowing so much money to extend their houses, get a new kitchen, and whatever. And I've also noticed that the 10-year gilt yield is gone from like around 0.7 last year, like in the summer or so, and now it's like at 1.5. It's come off a little bit today, but and I think we could be at 2 very quickly, and that's definitely going to translate into those people who have variable rate mortgages. That's not going to be a good thing, and add to that the cost of living crisis with the energy cap coming off. Yeah, I see the UK economy not doing too well. And as for the ECB, maybe you could touch upon the fact as well that I watched a little bit Lagarde's press conference last week, and she didn't seem that hawkish, but apparently the markets seem to think she was. And I think one thing that could be a problem is not even the rate hikes, but also stopping the QE for countries like Portugal, Ireland, Italy, Greece, and Spain, the old pigs from the sovereign debt crisis in 2011, 2012. And I noticed that the BTP Bund spread is starting to inch up a little bit, even though it's still far away from, let's say, 300, which is like a critical level. So how do you think that's going to pan out?
Yeah, the European, I mean, talk about the most ridiculous union of trying to have a single currency and a single interest rate mandate for 27 economies that couldn't be more disparate. I mean, how do you set the same interest rate between, say, Germany and Greece as two obvious examples? So it's a failure from the day it was implemented. I remember talking to someone back in 2000 going, this will never last more than a couple of decades or so. It's doomed before it even starts. But setting that aside, the ECB's kind of had this policy where they're kind of talking about it. And, but, we might have some rate hikes, but we want to keep financial conditions favorable until the Eurozone economy's rebounded from the pandemic. Well, there's all this fake idea that economies have rebounded. They haven't. And also that inflation's going to settle at this mythical 2% target, which in their infinite stupidity, they kept saying almost, well, it'll never get to 2%, even though inflation in Europe was significantly higher than 2%, like it was in the UK or the US. So yeah, Lagarde comes out and they're going, she's made this hawkish shift in her comments just because she refused to rule out a potential rate rise this year. And, even though, of course, inflation was a record high in the Eurozone, inflation of 5.1% in January. Put this in context, the Netherlands is, which I obviously know extremely well, its inflation is at 7.6%. As an example, and that a lot of it is to do with energy costs, and because a large part of the Dutch economy depends on energy, not least their enormous agricultural industry, which has these enormous greenhouses that grows produce all year round. So that's just one example. So interestingly, the Dutch have come out, the central bank, and gone, you've got to raise interest rates this year because I think, what's his name, Klaas Knot, he's the Dutch central bank head, came out and said, well, Eurozone inflation could stay in excess of 4% for most of this year. So, you've got to stop net bond purchases and then look to raise rates in Q4, which may mean it never happens. Now, the second, of course, this happened and these statements came out, what do we see? The yield on the Italian 10-year rise is about 1.85, something. So levels kind of about April 2020 time. And obviously the spread between the Italian 10-year and German, which is often seen as a kind of barometer in inverted commas of stress in the Eurozone, bond markets rose. Okay, it was about 1.65%. Well, it was its highest level since July 2020. So not a major problem, but bear in mind, we're only talking about the possibility. And in some cases, well, it might not be till Q4. So, we could be talking 8-9 months away. In terms of the Greek 10-year, that had a bit of a spike in the yield. It rose to about 2.55%. That's the highest in probably 2.5 years or so. There was also widespread kind of selling with the Spanish 10-year yield that rose over 1%. I think that was the biggest hike in about, or the highest level, sorry, for about 3 years. So this is just on the basis that someone might be suggesting, Lagarde, that we might have a hike, and then obviously the Dutch come out going, we need to have a hike. And then, of course, Lagarde tried to sort of realize, hang on, and maybe I've set some catalyst for future problems or ongoing problems in these markets. So came out and went, well, we're not going to have a sudden shift in ECB policy because apparently there's no rush to make any premature conclusion at this point because everything's so uncertain, meaning we don't want to raise interest rates, but we're going to make out, well, inflation could magically vanish in the next few months, and then we won't need to raise interest rates because we're back to the point, rather like we said, with the US, they can't raise interest rates either. So, and then, she came out and said something about there are no signals inflation will be persistent or significantly above our target over the medium term. What's that? 2, 3, 4 years? Who knows? And again, it's just we cannot do this. So therefore, we don't want to do it. But, we know the ECB in the last 2 years has bought more than literally 100% of debt. That's net of refinanced bonds issued by governments obviously in the Eurozone. And they've, it's doubled the total amount of bonds. I think the last I saw was about 4.8 trillion. So again, it's one of those situations they just don't want to have to make the decision, because if bond markets start to have a schism, in inverted commas, on the basis of, well, it might happen, but maybe it's Q4, maybe it isn't, they actually start doing it, the bond markets could absolutely capitulate. The stock markets could capitulate, and then we start to have problems in terms of what does that not just do for economies, the real economy, because everyone's so highly indebted, but what happens to the financial system if you start raising interest rates? Because there's this big black hole of derivatives that is not just in terms of interest rate swaps and what it might do to those, but all this exotic kind of derivatives which can involve 3 or 4 parties. There's all the counterparty risk, and they have no comprehension what that might do, because we had years of low interest rates. What happens if you suddenly start raising them? What would it do to the derivative markets? Never mind bond markets, economies, and the general well-being of the financial system, and what's the implication for banks themselves, etc., and corporations and other financial institutions, and the whole shadow banking market. I love the way the West loves to talk about China's shadow banking, which has largely been under huge reform and rooting out much of the problems in the last 2 or 3 years. The Western shadow banking system is ginormous. It's equivalently tens of trillions of dollars, and it's risen enormously. I think literally 300% in the last couple of years. So again, there's another huge problem that no one has any visibility of. So really, in essence, the European Union is in some ways in a far worse position than the US and the UK, because it's trying to manage 27 spinning wheels, and trying to implement policies that simply are untenable, because if they do raise interest rates, what's it going to do to bond yields inside Greece, or as you say, Italy or Spain, the pigs? It's going to be infinitely worse than the problems it causes in Germany. But then the German economy is in serious trouble, not just because of the pandemic, but through years of neglect in terms of rather like the UK did. I mean, Thatcher, in her infinite stupidity, well, in one sense was right that there was all these traditional industries that weren't economically competitive, but instead of going, well, okay, we need to phase these out and replace those industries, they just raised them to the ground and went, well, we don't need a manufacturing base because we're going to have financialization of the economy, the trickle-down effect. Of course, it all failed. Well, Germany's been this industrial powerhouse for decades, but it's rested on its laurels. It's not evolved with the times, and it's starting to now stutter in terms of its manufacturing base. It's obviously got enormous internal financial problems. We know talked about its banking system. You know, Deutsche Bank and Commerce as two examples, and also, unfortunately, ultimately, Germany's on the hook for all the Eurozone debt and all the problems. So this is why it needs to make a decision to get out, rotate out the European Union. But to do that for Germany is extremely difficult, but it should have done it. It needs to do it, but it's got enormous internal problems economically, financially, its political system, the new government is completely at odds with itself. I mean, there's people who are very pro-NATO. There's ones who don't really want to be in NATO. There's ones who are very pro-China, Russia. Those who are very anti-China and Russia. Those it's just pro-NATO, as we said, or anti. You know, there's just no joined-up thinking. And you know, as much as Merkel was a disastrous chancellor who actually did nothing, but was just there to remain chancellor as long as possible, but actually get out before the writing was on the wall. At least kept some modicum of trying to prevent some of the internal problems manifesting, but now they're just eating each other alive internally, politically, and therefore there's huge problems. We know France has got enormous internal economic, financial problems, and of course they've got a presidency coming up in April, and Macron sat there going, well, the alternatives could be Le Pen or Zemmour, and they're both very anti-EU, anti-NATO, very much wanting stronger alliances with not least Russia, but also China. So there's going to be enormous problems facing the European Union. And then the ECB sat there, who their mandate, even since Draghi, was kick the can down the road, and Lagarde kicked the can down the road, but they're running out of road, and the can's getting to the point that if they kick it, it'll break their foot. So they're going to have to make policy decisions. And the pressure, of course, from the ECB, it's not like the Bank of England. Who's it answerable to? Well, the ECB is answerable to all these domestic central banks, like the Dutch, who are going, look, we can't cope with inflation. Even though raising interest rates high enough isn't going to happen. And even if they raise interest rates in Europe to 3-4%, which they won't, it's probably not going to make a scrap of difference to inflation. And of course, it will blow everything up in the process. So it's a very similar outlook, unfortunately, for all Western nations, including the UK, including the Eurozone, and of course the US, and by extension satellites thereof, so like Australia, for example, and Canada, etc.
Yeah, and how do you see the commodities and specifically gold and silver doing in this environment? Because I've noticed like the CRB index continues to move up quite strongly, and it's still highly undervalued in relationship to its high in 2008. And could these markets be telling us that they don't see the major Western central banks actually reining in the inflation, that they're gonna succumb to pressure?
Yeah, commodities it's a bit of a tough one. I'll talk about gold and silver in a minute. In a broader sense, commodities, there's for me a couple of issues with this. Firstly, how much is the spot price of commodities being driven by traders? I mean, that's one aspect. I mean, we certainly know for a fact that gold and silver that they're being driven downwards at every turn, or trying to suppress the price. That's self-evident. So there's that aspect. There are supply chain issues. It's a bit debatable half the time why there are supply chain issues when China doesn't seem to have supply chain issues. But again, China, I spoke about this on my own podcast since almost the sort of early-ish 2020, maybe April, May time, should I say. They were stockpiling every commodity they could get their hands on. Gold, silver, aluminium, zinc, food commodities. I mean, they own about 60% of wheat, corn in the world now. So they've been massively stockpiling commodities, which has also created shortages. There are clearly shortages, we know, for example, in fertilizers, because they simply can't produce the fertilizer because of the hike in energy costs. So energy costs, of course, is going to be the prime driver of all inflation, because everything in this world depends on energy. So you want to produce a commodity, it requires energy. Energy costs are going through the roof, so are commodities. So do I actually think if they raise interest rates, is it they're going to try and dampen down the commodity market? I don't think that's going to make a scrap of difference. Because again, the question is with regards to energy, what's actually driving the hike in energy? And there's a lot of schools of thought where people go, well, the world's running out of oil and gas. It's not, for me, running out of oil and gas. Russia alone has got mind-bending amounts of oil and gas, never mind unexplored resources of oil and gas. I think a lot of it is there was some shift away because of the whole green debacle, which reduced investment. It's one thing reducing investment, but reducing investment doesn't mean that you haven't got the energy. And look at the UK, they've announced that yesterday they want to get 6 oil and gas fields in the North Sea online ASAP. There's an indication the energy exists, but they've finally woken up to the fact that green debacle's nonsense. And this zero net energy policy is garbage as well. So I think less of it's to do with how much energy is available in the world. I think it's more to do with the investment that's being made. And also, we know that OPEC Plus has been throttling oil production for whatever reason. And there can be some political reasons for that. And also there are just economic reasons. If they can hike oil and they, financially, they're going to benefit because they're selling oil, okay, in spot price terms for a lot higher than they were a few months ago. In terms of contracts, well, they've got a long-term contract, they're stuck with the price. That's just the reality of it. But in terms of commodities, there's an argument that commodity prices could just keep rising. But there comes a point where, like for me, the oil price is going to reach a ceiling, because if oil gets to stays above $120 a barrel, it's going to blow up derivatives markets. It will blow up Western economies just on the basis of. So there's going to come a point when someone's going to go, hang on, we just can't keep having a hike in the price of commodities. But the issue comes back to demand and supply. And if there's a lack of supply because of energy considerations, whatever they may be, then of course, and there's a demand, then it's going to hike the price. And I do actually think China has been sat on enormous amounts of commodities, and it obviously bought them when no one else wanted them, or everyone else was reluctant to buy them. But I think that's contributed also quite significantly to the hike in commodity prices. But I don't trade commodities. I don't go near them. What happens to the price? And, well, it remains to be seen. But at the moment, we're on this upward trajectory. But it's not sustainable. You cannot just keep having a hike in commodity prices and not have enormous consequences economically and financially. The gold, silver, for me, it's very, very different. And people might go, well, what a surprise you would say that. Well, if I look at, and I wouldn't call them commodities, but if we look at assets, gold and silver are the most ironically undervalued assets in the world currently. And no surprise, because ultimately they're perceived as sound money, which they are. So we know, and we've talked extensively, why gold and silver prices are manipulated to the downside, because it's confidence in the dollar. The dollar's a matter of national security, so therefore everything must be done to make sure that gold isn't at, say, $2,500 an ounce, because if it does, there'll be the biggest march out of dollars or fiat into gold you've ever seen. Big institutional buyers will go, well, I don't need to buy it at the moment. It's only 1,820 or whatever it is in dollar terms. So it's not a problem. But if it's a 2,500, everything's blown up, we need to get out of dollars or pounds or euros or whatever into gold. And then there's a mad rush, and then there won't be the gold available. So there is that to sort of factor into our thinking. But in terms of, and I've stuck by this for 9 years, the gold and silver price will only materially shift when the West is drained of gold. And what I mean by that is not literally there's no gold in the West, but the point is they don't have any supply, and the demand is at some point you're going to get this imbalance between the two, where you'll have a situation where people say at the COMEX will go, I want delivery, and everyone wants delivery because suddenly the whole dynamics change, and therefore they can't meet that demand. We know that's not feasible or possible, and therefore there's a force majeure, and then the whole paper market blows up and price discovery is achieved at some point in the future. Now, that could be a lot sooner than we think, but I never get drawn on dates. It's events. I will look for events. I know there was a big play about the Basel III and the NSFR. I don't actually think that's as big an issue as people think, simply on the basis that there was an opt-out clause. So if there's an opt-out clause, then, and I don't see anyone actually going, we're going to enforce this regulation. So I think it's just a coincidence. We've seen a hike in the gold price, but there was a lot of speculation, and I think I even made the point last time when I was speaking with you about there was a kind of gold was being held around the 1800 mark and around silver below $24, and that's been the case. And I think there was people saying there was a big whale buying. Well, here's the truth, and I know this from people who deal in the opaque markets where enormous tonnage is bought and sold. You would never be able to buy that kind of volume at spot price. If you want to buy a ton of gold there, you're going to pay $2,200 an ounce equivalent, maybe even more. Big tonnage is very hard to get hold of. So you're not going to have a whale who's pressing the price below 1,800 because they're buying at spot price. That just simply isn't reality. I think the far more logical explanation is that there was enormous amounts of paper shorts trying to be obviously closed out, which means, Brandon, and I don't assume everyone knows this, but if you're shorting it, you obviously have to sell and then buy back. So there could be if you suppress the paper price, you can buy back below 1,800 and close short. So it's entirely possible that there's a lot of shorts being closed, and the rationale for that is because there is a consensus in certain quarters that the Western financial system is beginning to creak very badly. And this comes back to why the US is desperately trying to invoke a crisis in Ukraine or Taiwan or anywhere else. It's desperation, and they're behaving, and I'm not saying it will be, but they're behaving as though the Western financial system is in serious trouble. And therefore that might be an indication where we need to start closing out. We need to get our shorts, because if there is a sudden spike in gold or silver, then those with enormous short positions could be in serious trouble. So eventually, I'm not going to say where gold and silver will end up, but it will certainly be revalued. I have thoughts, I've had conversations, but I'm not going to publicly discuss that because I don't want to be seen to be trying to subvert the price in a northerly direction. But certainly, if we're going to have future currencies backed by gold, then we're going to see a revaluation of the price of gold in today's terms, in, say, dollar or whatever. In terms of silver, it's going to be an enormous industrial metal in the future. That there's absolutely no doubt. But therefore, there's going to be industrial demand. Will it be utilized as a monetary metal? Probably not. Maybe Mexico might do this, or maybe other nations. It's possible. We shouldn't rule it out, but certainly silver is massively underpriced, and also it's a metal that's consumed, and increasingly finding extensive silver reserves is going to be difficult. So just on a demand supply curve, of course, the price will increase significantly. Silver, of course, is suppressed as much because we couldn't have a situation where you were suppressing the gold price and gold silver ratio became ridiculous, like 10-1 or something, or 15-1. It just would look strange. So when one gets suppressed, the other does. But there's no doubt every time there's a smell of fear in the air, they come out and try and hammer the gold price. This is irrefutable. I don't think anyone can argue the point. And it's just about confidence in the dollar. And it's all about maintaining that, because even though large parts of the world know it's an illusion, know it's not reality, know the US is printing trillions of dollars, and they're going, look, you might not believe it, but you're behaving like Zimbabwe now. We know you're doing it, and therefore we're lacking confidence, and we are de-dollarizing. And contrary to people who are big advocates of the dollar, de-dollarization is far more extensive in terms of bilateral, trilateral, and multilateral trade than conventional wisdom would suggest. And I always come back to the point that quoting official data in any capacity is utterly meaningless. It's like quoting the CPI and telling me it's inflation, quoting the tick report and saying that's the reality of treasuries across the world. Quoting any form of metric that the West produces is why we had 2008 and nobody or hardly anybody saw it in relative terms. And for me, it's because I didn't look at published data. I looked at what was happening in reality when we've got an enormous problem. This is going to happen. I didn't know it was 2008. But if you look at all the metric, all the data that's produced, it's just giving us this illusionary sense of some reality that's not reality. So we have to be extremely careful when we look at any of this data and say, well, that actually in reality means X, Y, and Z. So this is why most central banks go completely wrong, because they look at data that's not reality. Okay, there's an argument, do they even believe it themselves? Well, that's a whole separate question. But if you look at all the data out there, you would be deceived into believing that we don't have the financial and economic problems that we all know in reality do exist. So we have to be careful in that regard. But at some point, gold and silver will have their so-called day in the sun. Of that, I have no doubt. But I've said for 9 years, you won't retime, oh, gold breaks this. It's some mythical support or resistance. For me, it's just not reality. But it's not about what the gold and silver price is. It's a protection. It's the insurance policy against everything. And it's about purchasing power. And I've said this before, but I'll give a simple example. And just to keep the math simple, let's say you buy a £200,000 house in the UK, and currently gold isn't, but let's say gold's at £2,000 an ounce. So it requires you to buy a house in gold, 100 ounces. Now, let's fast forward to a scenario where the housing market does capitulate. It drops, let's just say for argument's sake, and I think I'm being quite generous in saying the house then is £150,000, because the housing market's likely to capitulate far more than that. But okay, let's say 150,000. And let's just, for argument's sake, to keep the math simple, the gold then is at that point is valued at 5,000 GBPs per ounce. Then suddenly your purchasing power means that you can then buy the house in gold terms for 30 ounces. That's the fundamental basis, that you hold sound money until the point where you don't need to hold the sound money, and you can then rotate out of the sound money and buy other assets. That's the whole point. It's not an investment to accrue fiat profit, which you see all these people constantly getting anxious that gold hasn't risen more than, oh, it's gone up $30 today, it's breaking out, it's going to be 1900. And I'm sat there going, no, it won't do. That's not when it actually breaks out, it will be very obvious it's breaking out, and it will not be moving in terms of the gyrations we see in the market now. But it's about protecting your wealth. It's about the purchasing power in the future, and that's when it will become relevant. And I don't see an awful lot of people discussing that, and I don't see an awful lot of people who hold gold and silver actually even understanding. They're just talking about it constantly and getting bent out of shape about it in dollar terms, and for me, on a near daily basis. And that's not the point. The point is, we don't know when the building's going to completely burn down, but we know it's probably half burnt down, and you can still buy it relatively cheap. And I'm not telling anyone to invest in it, because I don't give investment advice. I'm just saying, from a personal perspective, I see it as the only way to protect yourself until the point comes, which it will do at some point, when the world will be very different in an economic, financial sense, and then it'll be the time to rotate out of gold. Maybe not silver because it's an industrial metal, but certainly gold. And then you buy assets because then it's prudent to do so.
Yes, I have an example. I remember back in 2002 or three, the gold sovereign, which is just under a quarter of an ounce of gold, was around 50 pounds, 60 pounds. And if you wanted to go out for a nice dinner, for example, with the missus, a nice bottle of wine, it probably would cost you 80 to 100 pounds. So about two sovereigns. And now the sovereign is like 330 or 350. And if you go for a nice dinner, yes, it's going to cost more in fiat currency in pounds, probably cost you 150, 170, depending on what kind of wine you want to have. But that means you only need half the sovereign. So I agree with you. People need to look at it more as an insurance and how much it will purchase. Just another question. You mentioned that in the wholesale market, if you really wanted to buy real gold, like a ton, that you'd have to pay over $2,000. And I found that quite interesting, because we always hear like from some people that the wholesale market, you can buy it like almost at spot. But I assume a lot of these people are just talking about paper gold.
Yeah, you can't know. Okay, I know there's all the traditional sort of transparent gold markets with, and then people quote, this much gold's moved from, I don't know, London to Hong Kong, or Switzerland to Shanghai, wherever it might be. And I'm not saying there's anything wrong with that data. What my point is, there's then this opaque market where huge amounts of metal moves around. It's never recorded officially anywhere. It'll be, it might be, for argument's sake, China goes, right, we just want to source as much metal. And to give you an extreme example of this, and I have said this before, but it's worth reiterating. Back in sort of 2011, around that time, 2012, China was, well, effectively Hong Kong and Shanghai was importing 1,000 metric tons a month for 2.5 years. Now, did anyone see any of that data anywhere? No. That's the opaque market where enormous tonnage moves around. It's never recorded anywhere. China or Russia, or whoever's buying it, will never publicly announce it. It's it's deemed to be a matter of national security. It's in strategic reserves that nobody has any inkling of, which is why China has enormous silver reserves, enormous gold reserves, and enormous other commodities that's all put in this strategic reserves, and nobody knows anything about it. That's where, for me, the real price action is, or the real tonnage gets bought and sold. Doesn't mean there isn't tonnage going elsewhere, but you have a cumulative effect where we have seen nations, like Hungary, for example, or Poland even, buying quite significant amounts of tonnage. Now, people always go, well, they managed to buy that last month. No, that's just when they stop buying, but they don't get 100 tons of gold in a month. That's impossible. So, if you go to opaque markets now, or people I know who deal in this, and there might be a high net worth individual who goes, can you get me 200 kilos of gold? Could take them 2 months, because they've got to find someone who's willing to sell it. Now, sometimes there are distressed sellers because they've got other problems and they've had to bail out of tonnage of gold. It does happen, unfortunately for them, but circumstances are what they are. And then, therefore, then they're looking for a buyer, and someone might go, well, I'll take 100 kilos. I might take 500 kilos or whatever. And someone will buy it up. Now, it could be high net worth individuals. It might be sovereign nations. It could be a whole bunch of people or institutions who are buying it. That's where, for me, the barometer is not spot price. there's often this mistake when people look at the retail market and go, well, if I buy an ounce of gold, I pay more than if I buy 10 ounces. Because, they give you a bit of a reduction on the price. It doesn't work like that in the world where you're dealing with hundreds of kilos or tonnage. It's quite the reverse. If you want a ton of gold, you are not going to pay anywhere near spot price. You're going to pay a significant premium because the amount of legwork that has to go in, etc., to secure that tonnage and all the work that needs to go into it, then it's going to hike the price. I mean, and also it's just demand supplying it. That if you demand huge tonnage, it's not the same as me going into, I don't know, some online bullion dealer going, can I have 5 ounces of gold? They're going to go, no problem. And therefore, they can proportionately go, well, excuse me, we can charge you this, but in the opaque markets, it's totally different.
I see. Paul, maybe we should wrap up, and maybe you could talk a little bit about what we're seeing in terms of the pandemic, all the restrictions, at least here in the UK and some other countries, seem to be getting lifted, be it for political reasons or maybe for the fact that politicians are waking up to the fact that unless they get things going back to normal, that the economies could unravel. So if we could finish off with your views on what's going on, and maybe touch upon what's going on in Canada, if you think that, if that has had any impact.
Yeah, okay, let's talk about the UK. I mean, look, my position regarding the pandemic is never wavered. I've been very consistent from day one in that it was never a planned pandemic. You're not going to get global buy-in to this. There was a whole bunch of policy decisions made that were ludicrous. No one's disputing that. And, but the point is, here we are now in the UK where they've ripped up all the regulations. There's nothing particularly in place. I mean, except in hospitals, and there's talk that they're going to remove whatever restrictions are in place within the next few weeks. And I always made the point, and I said last autumn, you will get to next spring when they'll perceive that the worst of this, whatever people want to perceive it to be, a pandemic, whatever, will be over because we're getting into the spring, into the summer. And I said last autumn, the economic imperative is now so great that they're going to have to start moving the goalposts. They cannot keep this kind of process up of all this kind of, well, not necessarily lockdowns such in the UK, but restrictions and what it was doing economically to the nation. And therefore they got to a point when they went, we have no choice. We're going to have to do this, because there was people screaming at them in the business sector. There was people in government and government advisors who were saying, this is totally unsustainable. You are going to blow everything up. We're going to have a nation of people who can't feed themselves, can't keep the lights on in the house or heat their homes. We're going to have literally a revolution of people in this country, because if you got to that point, you would have societal unrest. So that there is absolutely no doubt. So the policy decision was driven, okay, initially there was all this hysteria amongst government advisors about Omicron. The government sat there and went, hang on, let's just see what happens. And very quickly they went, very mild, yeah, it's contagious, so what? We don't care if it's 200,000 cases a day, there's no hospitalizations, right? We can start walking away from this. And they have, and they've just backed off from it. And I always made the point, at some point in the future, probably next spring, this will happen, because it has to happen. And this is why I come back to the point, there isn't a grand conspiracy. And I've stuck to my guns, and sorry, but the people at the outset of this who said once they lock us down, we'll always be locked down, and all the other stories, none of that has come to pass. None of it. Because there never has been a grand conspiracy. Yeah, they've made monumental mistakes, the most stupid decisions. But I always come back to the point, the governments are so incompetent. And I know people who've sat in government meetings who were government advisors who told me stories that you would go, I cannot believe that adults would think this way, talk this way. Don't ever underestimate the stupidity. I'm not saying in this regard there weren't entities and individuals and big pharma trying to make a huge payday out of it. Of course they were. No one's disputing that. And no one's disputing the influence that big pharma may have had over policy decisions. No one's doubting any of this, but that doesn't make it a global conspiracy. So, okay, in terms of the UK, they're now going, okay, we need to start addressing economic problems. And there was a big play also that somehow this green agenda was going to roll out this nefarious policies. Well, COP26 was a complete failure. And look at the UK. They've announced we want to resurrect 6 oil and gas fields in the North Sea because zero net policy is a failure. We can't do this. It's an economic imperative that we get these back online. There you go. There's a case in point. The economy wins through. So I'm sorry to be so blunt, but a lot of this talk of nefarious policies just hasn't played out because, I come back to my point, anyone who understands how the world really operates, which the alt media largely has no idea, would tell you straight off, no matter what side of the fence they're on, we would never entertain this idea because there are so many enormous risks in doing this. And of course, they're now starting to realize the enormous risks of their stupid pandemic policy, that it's blowing economies up, that it's caused massive inflation, that now, okay, it's tokenism to some extent, but look at the UK government's gone, they're going to give you a rebate on your council tax. Okay, they want to claw it back in the future. No one's disputing that. But that's when they think normality will return, which it won't be. And also your energy bills. They're doing that because they're frightened. They're frightened that the cost of living crisis is getting out of control, which it already is. And I know for a fact that within the UK government, there are people screaming at them about the cost of living crisis. And we really do risk having enormous problems in terms of energy costs, people feeding themselves, inflation, the impact on people's jobs, their livelihoods. They're very, very concerned that you're going to have suddenly a cost of living crisis that consumes not just the poorest people, but starts to engulf the middle class. That's another reason why raising interest rates is a problem, because often the middle class are the most leveraged in society in terms of loans, credit cards, bank loans being leveraged in terms of overextending themselves, mortgages, etc., etc. So there are all these imperatives that are driving policy decisions. But of course, as ever, they should never have done this. As I said, in August 2020, I wrote to the government when, look, you need to be aware you're going to cause massive inflation in the real economy doing what you're doing. You're going to destroy swathes of the economy. The inflation would inevitably creep into the energy sector because of these insane green policy decisions. And the attitude comes back, well, yes, okay, these are all important points, but at the moment we're dealing with a pandemic and it's all about case numbers, which means hospitalization, which means we can't be seen having camera crews filming people dying in corridors, dying in ambulances, dying at home. The optics are so bad. So, but, don't worry because the economy will recover because, it's like everything else. We can kick the can down the road. Inflation will only last short term. They genuinely believe all this nonsense. So when people hear central banks, these central banks actually do believe the nonsense half the time they come out with. It's only now that they're starting to go, hang on, this is a far more serious problem. But look at 2008. They didn't see it coming. They weren't even remotely aware that it was coming because they're oblivious to reality. And nothing has changed in the intervening period. It doesn't change with government. Now, this doesn't mean there are not entities who are trying to make a fast buck, but there's not. I'm not saying governments are squeaky clean or anything. Of course they're not. But we have to get the balance between the reality of the world. I mean, there are massive conspiracies every day of the week. Ukraine's a huge conspiracy. We know exactly what the intention is, what they're trying to do, and what the risk is. That's a really important problem. Kazakhstan, the Color Revolution attempt, genuine conspiracy. There's a lot of these things happening, but I don't see the alt media talking a lot about it. And my concern is that as this whole pandemic sort of dissipates and goes away, they're going to be looking for the next gravy train story to try and stoke up fear and claim that, you know, the WEF is doing X, Y, and Z, you know, and which of course is an inevitability because for them, it's a revenue generator. It gets them clickbait. And I know people who've actually said to me, I know the WEF is an impotent organization, but if I go and say that to my subscribers, I'm going to lose them. I'll lose revenue. So I have to tell them the juicy story to keep them on the hook. Otherwise, I'll lose them and I'm going to suffer financially. Well, that's my case in point. I will never put myself in the position. I've stuck to my guns with regards to this pandemic, and it's playing out exactly how I've said it would do. Even going back from 18 months ago when all the people were starting to get bent out of shape, that they'd lock us down forever. Well, that never happened. That they were going to, do all these things, and it never happened. And we have to be extremely careful that we don't get sucked in to, because for me, there's fundamental problems that absolutely are existing. And there are genuine conspiracies, there are genuinely enormous problems. And I would rather, like you do, Mario, and talk about the economic reality. It might seem boring to some people, but these are the problems that we're going to face today, tomorrow, and going forward. And it's far better we deal with those realities than worrying about the idea that there's someone somewhere plotting the downfall of the world, which of course, just look at China and Russia, proves that they're not part of the whatever people perceive to be, and neither is 140 nations in the world. So if it's a plan for world domination, what part of the world is 140 nations? Well, a huge part of it. They're not buying into any of this. So we have to be careful that we don't get sucked into stories that don't have any basis in reality. There are people who won't like me saying this, but you know what? Judge me by what I've said in the past in terms of the pandemic and what's happening now. I've been far more closer to the reality of it than all the extravagant conspiracy theories saying about all these things were going to happen. Well, like COVID passports, they've axed them in the UK. Well, that was one of the fundamental bases that somehow this was going to morph into something where they'd have literally your shoe size and your inside leg measurement on, and then all these other things were going to happen. Well, if they've canned that, well, we need to start asking the people making these statements, well, okay, hang on, you weren't right about this. So, and in future, when the same people keep coming out with renewed theories, because in a few months or a month or two, there'll be another one, and it'll be an elaborate story concocted that this means this, this, and this. Because it's unfortunately, I've seen it for 20 years of my life, from the infancy of the internet, and it's been going on. The same stories regurgitated with a slight twist, like Davos. It used to be Bilderberg, now it's Davos. No one talks about Bilderberg. Bilderberg was where all the nasty people met and contrived the plans to control the world, and that narrative got dropped because everyone's like, well, hang on, that's not reality. So now let's call it Davos. Where were the people talking about Davos 10 years ago, 20 years ago, 30 years ago? It's just moving the goalposts, flip-flopping, moving on to the next juicy storyline because someone inside the WEF said that translates to all these other things that are going to happen. And that's not reality. Klaus Schwab doesn't control governments. Klaus Schwab doesn't make policy decisions in the world. Klaus Schwab might have a whole bunch of ideas, but so do a bunch of other people. But what has Davos ever done in reality? Nothing. And why? It's just, he makes a statement and everyone then, it just gets twisted into this idea that means all these other things. And here we are today in the UK. If you'd have gone back, a year ago, and when I was saying, in the end, it'll all fizzle out, pandemic will end, okay, life's not going to go back to normal because the economy is wrecked in the financial system, but all these restrictions won't be in place. And people were screaming at me, telling me I was part of the establishment and all that. Well, here we are 12 months later. That's exactly where we are. So stop having a go at me for stating the reality and start questioning people who are pumping these ideas out, because they're the ones misleading you, not me. If you don't like what I say and it's reality, that's not my problem. We're here to deal with reality, not stories that are clickbait and sound juicy and enthralling, and it's like, following a thriller film or something. We're not here to entertain, we're here to inform people.
Great. Thank you very much, Paul. I really appreciate you making time to speak to me and the viewers. To the viewers, if you want to find out more about Paul, you should go to the SiriusReport.com. Could you tell us, Paul, what service you provide and the cost of it?
Yes, thank you, and I appreciate. Yeah, I mean, obviously to put a bit of context very briefly, we had to go to a subscription service because the plan was to put everything out on YouTube, etc. And we literally got demonetized in 10 minutes. This was back before most people even were talking about being demonetized all the time. So we went to a subscription service. So we do the equivalent of 5 podcasts a week, which is like 100 minutes. So it's about 1 hour, 40 minutes. And we cover geopolitics, we cover economics, finance, and the aim is to try and distill what we think are important events, what people need to understand. We don't give people investment advice. If you want to make investment decisions, as a lot of people apparently have, well, that's up to them. That's not for me. I don't steer people. I'll just say, okay, this is what we're observing. And it's $4.75 a month. It's extremely cheap compared to peers. And the reason it's cheap is because we want to make it inclusive. The cost isn't a reflection on the quality of what we produce. It's because I think charging extortionate amounts of money a month is not reasonable. It's not a model we adhere to. We've never increased the price in over 5 years, despite inflation. And you're obviously a subscriber, Mario, which you are, and we appreciate all the subscribers we have. We've had a lot who've subscribed since day one and have stayed with us, and we feel it's good value for money, and we put a lot of effort in, and put a lot of attention to detail. It's not just the kind of, well, here's this and just stating the fact. We lay it out, and we feel it's good value for money, and we appreciate you obviously giving me the time to explain in very briefly what we discuss. And that's pretty much done all year round. We have a bit of time off at Christmas, so the sort of Christmas New Year period, but we never fail to put out 5 podcasts a week unless there's some very dire, serious issue at our end, which unfortunately has happened in the past at times. But we have that commitment, and I think we're now up to 1,360 podcasts. And we did actually have someone a couple of months ago who still started from the first one, and he's going, well, I'm up to episode 700 now and wants to listen to all of them. Now, I'm not advising people go back that far, but we think it's good value for money, and we appreciate everyone who subscribes. We'd rather we didn't charge people, but we had no choice but to do that.
That's right. We need to survive as well in this world. So, Paul, thank you very much, and I hope to speak with you again soon. Take care.
Oh yes, absolutely, and thank you, and obviously to everyone listening. Best wishes to everyone.